Okay. Bismillahirrahmanirrahim. Assalamu alaikum wa rahmatullahi wa barakatuh. Welcome everyone. We can see participants are joining now. Of course, this is the first time we are meeting each other, most probably. So, especially as, in regard to this particular course. So, I do not know what is your expectations. So that put me in a little bit challenged, but. And the idea here is that to provide an overview of this FAR module and then go through some MCQs. So those who will be sitting for the exam, inshallah, in coming 2 weeks time, in 2 weeks time, they will 1 week time, and it will be a revision for them. And those who are planning, still deciding, for them it will be like a sort of an exposure that okay, how this exam or how this course looks like. Okay, so as I was requested to introduce myself, you can see my name is Mezbah Uddin Ahmed. Of course, I did my CIPA, I think, in 2015, and then I did CSAA of IFA as well, and I'm also a professional accountant, and then I did my master's from Islamic University Malaysia, and now working in International Sharia Research Academy for Islamic Finance, ISRA, that is also based in Malaysia. That is an entity set up by Central Bank of Malaysia. Okay. So I will be, I have covered only the FAR module. You know that in the CIPA program, there are 4 modules, FAR, and that is financial accounting and reporting, and audit assurance and ethics, and the business and regulatory environment, and then Sharia standards and Sharia governance. Okay, and then of course, to be a CIPA, you have to fulfill a practical experience requirement. So our purpose is not to go through the syllabus and so on. It's just to for a brief introduction. And then for a FAR module, if you are sitting for the exam, probably, or if you have registered, with AAOIFI, probably you have received this book. You can see in your right-hand side, this book. And this is the first edition book. I think this book was issued in 2017, if I'm not mistaken. So there are 14 chapters in this book. We'll see the chapters in the next slide. But for the exam, I mean, how to prepare for the exam? For the exam, based on my understanding, the style is that you have to read this whole book, and especially if you can read line by line, that's even better, because sometimes the questions are asked basically from the content of the book. So maybe you know, you have read IFRS standards, and you may know IFRS standards very well, but still you may give wrong answer. Why? Because the book presented certain information in a different way. So you have to follow whatever written in the book. So that's why you need to read the book or read all the content of the book. It's very important. And then for the exam, there will be 100 MCQs. Some will be theoretical. That is basically you just need to memorize, and nothing, not much to understand there. But then there can be some scenario based. So often people ask about the FAR module that will there be any calculation based questions? Of course, in FAR it is accounting, so there will be calculation based questions. But what will be the extent of it? I do not know. IFE officially didn't state anything about that. But of course, you have to, I mean, since this is an accounting exam, you have to be prepared for accounting questions. 100 MCQs, 3 hours. 3 hours is okay. 3 hours, based on my experience, 3 hours is a reasonable time, but it is not too much time. I mean, that means that especially for calculations, when we try calculation-based questions, sometimes it takes time. It takes time. You cannot. You need to compensate this by taking lesser time for theoretical-based questions. So for theoretical-based questions, I mean, there are 100 MCQs, 180 minutes, 3 hours, 180 minutes. So for each question, you will get 1.8 minutes. Okay. So for theoretical question, you should try to save time. You should not take much time for theoretical-based questions. You should save time there, and then utilize that time when you're answering calculation-based questions, because sometimes it's difficult to answer theoretical calculation-based question within this 1.8 minute. So you may take extra time. So that's what you will get from what you have saved from the theoretical-based questions. Sometimes, of course, the question will be confusing. Not necessarily every time it will be straightforward. Some questions will be straightforward, of course. Even some questions will be, hopefully, especially based on my experience, maybe some questions will be too much easy, but then some questions will be confusing. Okay, so you need to save time or whatever is easy, so that you can give your concentration in whatever is difficult. But of course, one basic exam trick is that if you are stuck on a question, don't just sit idle, but don't take too much time. If you see that you're not able to answer that question, just move on. Maybe just give you best answer, whatever you think is the right answer. Maybe you're not sure, but still make a guess, make an educated guess, and then try to attempt the question, because there is no negative marking. So if you just guess it, there is a 25% chance that it will be a right answer, even though maybe you don't know the answer. So don't leave any question unanswered. Of course, you must answer all the questions, even if you don't know the answer. So, again, don't spend too much time on one question. If you don't understand, no worries. The pass mark is only 70%. So you have, if I may say, the luxury to give 30% wrong answers. So, but yeah, so don't be too much worried about like if you don't know a few answers. So still there is a high possibility that maybe inshallah you'll pass. Okay, so for the book, I said you have to. It's better. It's strongly advisable, and that you read the whole book line by line. But those who already did it or doing it, of course, you are in an advantage position. But those who maybe didn't do it, so, and sitting for the exam in 8-9 days time, then it will put you in a challenge, but then try as much as possible. The book looks very big. It's around 400 pages, looks very big. But then in fact, if you see carefully, the font size is quite big. There is the line spacing is also quite big. So in fact, it is not really 400 pages book. In a standard format, it will be even shorter. So it's not that a very large book. So even I believe, I mean, provided that you are studying full time, I believe still 8 days is enough to prepare for the exam, inshallah. Of course, provided that you have a certain background. Okay, so in the book there are 14 chapters. AAOIFI has assigned a certain weightage. You can see in chapter 1, that is A01, that is 5%, then followed by chapter 2, A02, 2%, and then Murabaha 8%, Salam and Istisna 15%, and so on. And the last chapter, F02, 2%. Now, I'm not very sure whether we maintain this weightage in the exam or not. It's not very clear to me, to be frank. And when I asked about, when I asked others, like, okay, in the exam, do you really find this sort of weighted coverage in the exam? People say, some say no, some say yes. So it's like, I don't know. And so you should be better. You are prepared for all the content. You should not leave anything behind. For those who have read the AAOIFI standards, AAOIFI accounting standards, AAOIFI financial accounting standards, for them, I need to just make a note that some of the AAOIFI standards superseded. Older standards are superseded by new standards. But for this exam, you will be examined based on the book, so which covered some of the older standards. Like, for example, for Murabaha, even for chapter 1, chapter 2, Murabaha, even Ijara, and a few other standards, you'll see that these are older standards. So of course, in the exam, you must give answer based on whatever is written in the book. you may give answer based on the new standards, but it's still you answer most likely will be considered as wrong, because that is a new development which is not captured by the book. Okay. So any questions so far? Okay, for the question and answer, always you can stop me. I think there must be a hand raise option somewhere, and then of course you can drop your question in the Q&A box or in the chat box as well. Okay, so any question from anyone?
Oh, Brother Mezbah, at the moment there is no question.
There is no question. Okay, right. So my approach will be, as I said, since this is the first time, I do not know what is their background, or are you studying for the exam or not? Are you just trying to explore this qualification? So what I'll do, I'll go through some MCQs. I'll try to cover all 14 chapters, but we need to keep in mind the time. In Malaysia, our Maghrib will be around 1.5 hour time. So of course we need to be mindful of the time as well. So whatever you can cover within the time, and you can of course give your feedback whether we shall have more interaction or not. So let's have a poll.
All the participants, you are requested to kindly click on the poll based on the question from Brother Mezbah. Are you attending or not? See, only 5 people have attended so far. Clicked on the poll. So, 10 people now. Is there any candidate for June? We don't see any till now for June exam. Okay, 1. This should not take this much thinking. Huh? We need to quickly move on.
Okay, so we have received a reasonable number of responses. Let me share the answer. So see, 77% is basically is not a candidate for June or for December. Okay, so maybe you are just exploring the qualification, which is good, but only one is sitting for the exam in June. So for the one who is sitting for the exam in June, inshallah, the next exercises will be a revision, inshallah. And for those who are just trying to explore the qualification, or how does it look like, or what is the exam question style, or is it easy for me, or it's too difficult for me? So hopefully that will be some an exercise for you as well. I mean, it will give you an understanding whether it's doable for you. Okay, so let's proceed. But as I said, if you want me to stop somewhere, if you have any question, please feel free to ask. Okay, so let's continue. Now, in chapter one, there is a basic introduction of about accounting standards or accounting framework. In chapter one, this book provided a basic introduction about Islamic finance, what is Islamic finance, and how it's different from conventional finance, and what is accounting framework. So these things are covered in chapter one. Okay, let's try 1, 2, or 3 MCQs from this chapter. Please try, try. If you even don't know the answer, there is no harm in trying. Okay, I'll give about 50 seconds for these questions. Of course, in exam, you will have more time, but you will have about more than 1.5 minutes. But for the sake of saving time, we'll just give around 50 seconds only for each question. Okay, so what is the response? What are the responses? So B, majority is B, and then followed by C, A, and D. Okay, what is the right answer? Yes. So you can see, mashallah, so majority was right. So you can see the question can be very easy. Okay, what about the next one? Okay, let me stop now. Okay, interesting. A big number said A and D, and then C. Okay. Now, I'm not sure why the majority responded A and D, because it says not correct. I do not know whether have you missed not, or you understood there is a not here and then still you answered A and D. Because in A, it says the need for Islamic finance was felt primarily due to presence of riba or interest in the conventional banking and financial system. I think it should be correct, right? It is correct. I'm not sure why you think that this is not correct. I mean, I'll be interested to know, but this is correct. Then the fundamental principle in Islamic finance is the use of permissible contract. That is also correct. For D, Islamic financial institutions aim to maximize oil for all stakeholders within halal means only. That should be correct as well, right? Okay, so C, in C, it says similar to conventional finance, Islamic finance drives to allocate resources to avenues of investment simply to maximize shareholder value. That's the difference between Islamic and conventional. In Islamic, we say that yes, Islamic financial institutions they try to maximize shareholders' value. It's true, it's one of the agenda, but it's not the only. It shall be within halal means, and they shall also look at others as well. So that's why we have used the word stakeholders. So not correct is C. C is the wrong answer. I mean, wrong statement. Right answer, but wrong statement. Okay. Okay, I have received a comment that regarding a previous question. This one. Okay, that is IFRS is not a standard setter. It is IASB or IASC previously. IFRS is the standard and not a setter. That is a very right comment. Yes, very right comment. Yes. So it instead of IFRS, it should be IASB. Yes. Turn to. Okay, someone commented time to okay, yes. In the exam, you may have more time to read the question and respond, to think. But here, if we, I mean, since these are theoretical questions, so that's why I'm trying to just save time. Maybe okay, I can make it 1 minute instead of 50 seconds. Okay, okay. Okay, what about this one? Okay, let me stop now. Okay, the majority responded B, recognition, classification, measurement, periodic reports. Okay, and some responded A, and then some responded B. But of course, I mean, if someone wishes to share why the B is right answer, but I think A is the right answer. Recognition, measurement, then classification, and then preparation of periodic reports. That's the right answer. A is the right answer. Okay. I wanted to mention another thing I forgot. Regarding this one, although yes, I fully agree, it should be a international accounting standard board. But then in the exam, sometimes you could be in a situation that, well, the options given, not all are correct. You may find, or at least you may feel like that. Sometimes it's true that it's not all are correct, but still you need to give an answer. So which one you will give? And in that case, you need to select the most appropriate answer, most appropriate answer. So that is another important point. So in the exam, sometimes you'll be in a position that you'll find that not all the options are 100% correct. So especially it happens for those who know too much. But in that case, you need to respond on the best answer. Okay. Now let's move on to chapter 2. In chapter 2, it discusses about, or it discusses about conceptual framework, IOFI and IFRS conceptual framework. So interestingly, these two conceptual frameworks, the conceptual frameworks covered by this chapter is the older one. IFRS since then issued a new conceptual framework as well as IOFI. But anyway, the basic principles, the fundamental principles mostly remain the same, So there is no much issue there. Okay, let's try this question. Okay, I think we reached a reasonable number. Let's see in here. The majority responded D followed by C, and some responded A and B. The right answer is D. The right answer is D. Why? It says the question was which one of the following is not an element in a statement of retained earnings? Okay, statement of retained earnings. It was part of the previous conceptual framework. In the newer conceptual framework, this is not there. We have only a statement of changes in owner's equity in IOFI. In any case, net income is part of it because net income form a part of retained earnings. Dividend, if there is a distribution of dividend, it reduces retained earnings. If there's and there can be transfer of reserves for various reasons, and that could be also affect retained earnings. Sometimes there could be some deductions from retained earnings. So the deduction will be from retained earnings, and then it will add to another reserve. So there can be movements between reserves. So this could be also part of this. But then PPE, property, plant, equipment, these are fixed assets. No, these are not part of statement of retained earnings. These are not. So this is PPE, property, plant, equipment. These are assets, and these are part of statement of financial position or balance sheet. What about this one? Okay, let me stop now. The majority said A, and then followed by equal number of in B, C, D. Okay, now B, C, D. B, C, I mean, yes, they can, I mean, these issues, B and C, it could be part of, I mean, could be material. Yes, B, C could be material. Okay. D, D also could be material, but then here we have added only if. Okay. But always we need to answer the best one out of the statements. And there could be like multiple rights, but out of multiple rights, we need to find the best one or the one which exactly reflect or exactly state a certain position or certain statement. So in this case, A is the right answer. Information is material if it's omission or misstatement could influence the decision that users make on the basis of an IFRS financial information. So the A is the best answer, or you can say A is how IOFI. I mean, this is a very standard definition, in fact, but in anyway, and this is what is the position of IOFI. Okay. Okay, Brother Abdul Qadir also mentioned that I'm moving too fast when I'm showing the question. So, okay, I'll add 20 more seconds. Okay. Now, this is a calculation-based question. Of course, I understand that you may need some time. I'll give 1.5 minutes, or maybe around 2 minutes. Okay, I think I should stop now. So interesting, we have A, B, C, A, B, D, and then followed by C. So what is the right answer? The right answer is B. Okay, please correct me if I'm wrong, but right answer is B. How? Customer deposited 10 million, let's say dollar, okay, in an unrestricted investment account. The profit allocated to the account was CU 5,000. So whenever there's a profit, we add this to the account balance. So 10 million plus 5,000. And then there's a loss in the second month. So whenever there's a loss, and I mean, this loss is allocated loss. So whenever there's a loss and it's allocated, so it will reduce the balance. So 10 million plus 5,000 minus 10,000, and then there was withdrawal of 50,000. So minus 50,000. So equal to B. So of course, then for this, for some of maybe you may feel that you don't need calculator. That's good, but then for most, you need a calculator, and it's faster anyway. And another trick, an important trick that if you can try to get at least 2 calculators in the exam hall. In fact, in my CIPA exam, I took 2. Then one of my one friend, I don't know him basically. He's sitting for the exam, but his calculator was not working the exam, so he was in trouble. But luckily, alhamdulillah, I had 2 calculators, so I gave it to him for the exam. So if you can, then better take extra, just in case if battery dies during the exam. So what you'll do, right? And there will be calculation-based exam, and if you don't have calculator, it will be too much time consuming. Okay, so what about this one? Okay, I can see not many are responding. Most probably, maybe you're not familiar with Hamish Jiddiya. Hamish Jiddiya means security deposit. So whenever there is a customer that tries to deposit, this financing, so the bank may ask to deposit certain sum of money. So in this context, we are calling it Hamish Jiddiya. But then, of course, there are more discussion to it. Okay, let me stop now. So the majority responded A. Hamish Jiddiya is refundable in full in the this will be if it's my mistake, full if the customer's promise is non-binding. That is the right answer. A is the right answer. So here in will be if. It's my mistake. A is the right answer. And then B, C, D are wrong. Remember that here the question is asking about Hamish Jiddiya, and the requirement is requirement set as per FS Note 2. This book, our IFR module, is based on our chapter 3 is based on FS Note 2, but then IFE has issued a newer standard on Murabaha. So if you already have read the new standard and you're very good at it, of course it's good, but then careful that you need to answer based on FS Note 2. That is, the book is based on this, or the chapter is based on this. Okay. So the issue is that if the customer's promise is not binding, in that case, the Hamish Jiddiya amount must be returned to the customer in full. But if it is binding, then the IFI may deduct only the loss suffered by it, and the remaining portion must go to the customer. It's different in the case of IBRA. Arbun. In the case of Arbun, earnest money, in that case, the whole amount belongs to the IFI. Irrespective, in this case, binding or non-binding doesn't matter. The whole amount belongs to IFI, but it is better, according to IFE, it is better for the IFI to deduct only the loss suffered by it, and the remaining portion to be returned to the customer. So this is just a recommendation in the case of Arbun. Okay, what about this one? Okay, I think I should stop. It's enough time already. In the exam, you already have crossed the average time allocated. Okay, so the majority responded A, followed by B, C, and D. So what is the right answer? C. Right answer is C. How? Now you can see here entity X requested AAOIFI, okay, to finance an equipment acquisition on the basis of Murabaha with deferred payment terms. So basically, the AAOIFI will purchase the asset and sell that asset to entity X. And entity X will later on settle the payment or make the payments on a deferred payment basis. So it can be in an installment basis or as at a lump sum on a future date. So basically, the IFI would sell the asset to entity X on a credit basis. Okay, IFI Y purchased the equipment on 1 January 2021. Okay, sold it after adding a 10% markup. Okay, so IFI has purchased the asset and then sold it, adding a 10% markup. So it has incurred the following cost. So okay, so to acquire the asset, the IFI has incurred some cost. Purchase price of the asset 200. Transportation cost. Here you can assume that this means that to transport the asset from the supplier to IFI's desired location. Then there is insurance in transit. So at the time of transportation, the IFI had to spend some money for insurance. And there is this administrative overheads and selling cost. And then total became 206. Now, the very, very basic criteria is that even it applies to IFRS-based accounting as well, that only the directly attributable cost will be part of this asset. Okay, so in this case, 200,000 and 5,000 and 500. These three will consist of the cost. Murabaha asset consist of the cost of the asset, Murabaha asset. So you can see C, debit Murabaha asset 205,500. So 200 plus 5,000 plus 500. So that will consist of Murabaha asset. The remaining, what will happen to the remaining 1,200? It will be part of expenses. So 1,200 will be part of expenses in income statement. And credit, of course, credit will be, let's assume IFI has paid the whole amount in cash. So credit is cash. Okay, so the answer is C. Please let me know if there is any question. Okay. Now, what about this one? The same scenario, only something is a little bit different. Okay, what is that? Or what will the answer? Okay, let me stop now since the scenario is same. It should save us some time. Okay, the majority responded D. Okay. And the answer is D. The answer is D. So debit Murabaha receivable 226050, credit Murabaha asset 205, and credit will be deferred profit. But of course, I mean, those of you have covered the AAOIFI standards on Murabaha, you know that the standards is somewhat not clear, you know, in the sense that, I mean, there can be two approaches when we do this accounting. So this is one of the approaches, and which is the correct one, but there is another one. There we record revenue, cost of goods sold. So there is also another approach. But anyway, here D is the right answer. Now,
Brother
yes.
Mezbah, I think Brother Sadaqat Khan Sahab is there. I think he wants to make some comment. He has raised his hand.
Sure.
Sadaqat Sahab, can you hear us? You can unmute yourself. Please go ahead, Sadaqat Sahab. We can hear you.
Yeah, Assalamu alaikum.
Wa alaikum assalam. How are you, sir?
Alhamdulillah, fine. This is a nice program is going on. Just I joined 5-10 minutes before. I missed that. But it seems very effective program and training, especially for those who are appearing in the exam. These are very crucial transactions where like people giving exam first time having confusion based on accounting practice and other. So I would like to thank all of you for organizing this program. Yes, I'm watching. Sure, I will give my contribution where needed.
Thank you. Okay, thank you. So you can see, mashallah, I mean, although many of you are not preparing or attending for the exam in June or December, or at least not planning for now for December, but you can see still you are able to respond many of the questions right. Okay, I wanted to mention another thing regarding this type of question. That is, you can see here, although the requirement I have mentioned about okay, answer based on FAS Norm 2, but then this is more about Sharia based, right? You can argue, you can say that it's not really accounting, right? It's more about Sharia. Why this question is here? But in the exam, based on my understanding and based on my experience, in the exam, you may find some questions that is basically based on Sharia standards. So of course, if you don't understand the Sharia basis or Sharia standards, then you may not able to answer these questions. Now you can ask, okay, so then does it mean that do I need to read the Sharia standards? Of course, I mean, it's better. But then whenever you will go through the module or you'll go through the book, I mean, the FAR module, I mean, these issues is already there. It's already there. These basic issues is there. It's not that if you don't read the Sharia standards, you're not able to answer these questions. No, it's not like that. I mean, of course, it's better if you have more knowledge. But even if you just read the book properly, of course, gain a proper understanding, then you will be able to answer these questions. And there could be some questions like this in the exam, I think. Of course, I cannot really say for sure since I'm not involved in the.
Brother Mezbah?
Yeah.
I think there is some question
from
Brother Abdul Qadir. Before we go there, like for those of you who don't know, Brother Sadaqat Khan Sahab. Sadaqat Khan Sahab is one of the most experienced persons in Islamic finance. His specialization is Islamic Sharia compliance and audit has been he's like one of the authority in terms of Sharia audit and compliance. So kind of him to be present in the program and so kind of him for making some nice remarks about us. Sadaqat Sahab, thank you very much. We really appreciate it. Okay, brother, can you have a look at the question from Brother Abdul Qadir Hassan?
Okay, Brother Abdul Qadir, in terms of Sharia standards, the administrative expense will be borne by, oh, really? I didn't know that. I thought that is also, I mean, that should not be part of the cost, the indirect cost. So maybe I can have a look again, but I don't think so. I tend to disagree, but still no problem in relooking at it. And then in this is this correct? On depends on the agreement by between IFI. Oh, okay.
He's not sure. He's saying.
Oh, he's not sure. Okay, okay. In that
No,
case,
he's not sure.
no. I mean, based on my knowledge, and I think I'm sure, inshallah, that no, administrative expense, these are overheads, indirect expenses. These should not be. They should not be. Okay. But of course, I mean, when you are charging your customer a profit, in that case, you can consider other cost that is possible. No? So you can add on when you are doing or when you are calculating or determining the markup. Okay. Someone commented in, I think, French. So of course I don't read it, so I cannot really respond.
She's
what is
just
here?
introducing herself. She is introducing
Oh,
herself.
okay, fine. Okay. Is there
From
anyone?
Morocco. Miss
Someone
Amal from Morocco.
Okay. Someone raised hand, I think. Is it so?
No, it was
No.
Sadaqa.
Oh, okay.
I think we answered him.
Okay. Okay, now let's move on to chapter 4. Chapter 4 is about Musharaka and Mudaraba. Musharaka and Mudaraba. Hey, sorry. It's Salam and Istisna. Chapter 4 is about Salam and Istisna, and chapter 5 is Mudaraba and Musharaka. So chapter 4. Okay, let's try this one. Oh, sorry. My microphone is muted. I just responded. The answer is A, and why the answer is A, although no one responded A. The reason is that if you look at the scenario, the key point is here is equal. The key point is equal. Okay. So since whatever we have received, that is of equal value, and that's why we the answer will be A. But if the value was more or less, in that case, C or B or C would be relevant. Okay. Now, what about this one? Okay, let me stop here. So the majority responded C, and then followed by, of course, A, B, and D. The answer is C. The answer is C. Now for this, if you don't know the IOFI requirements on Istisna, then of course it will be a little bit challenging to respond. To question like this. But anyway, the answer is C. And how the answer is C? Let me just briefly explain that. So an IFI enters into an Istisna contract with a XYZ construction company, in short XCC, where the IFI will construct a warehouse for XCC. So IFI is a seller basically. He will construct the asset. So at a price of 500,000. The total cost of construction of the warehouse is 450. So total, the IFI will get a profit of 50,000. Okay, so at the end of year one, the cost incurred to date was 250,000. So what will be the Istisna profit recorded in the books of the IFI in percentage of completion methods? So here in Istisna standard, there are two methods. One is percentage of completion method. Another one is the completion method. That is at the end of completing the work, you will record everything together. So in percentage of completion method, we every year end, or at the end of every year, or at every reporting date, we need to identify how much has been completed, and based on that, we need to recognize income and expense and profit. So, and how we identify this percentage of completion method based on the standard. I mean, if you are familiar with IFRS-based accounting, you see that there are more into it. But then in IOFI-based, in this Istisna standard, so it's simple. What is the total cost? 450. How much incurred to date? 250. So 250 divided by 450. Then you will find percentage completed thus far. And then what is the total profit? 50,000 multiplied by that. And then you will find C. So C is the right answer. Okay. Now, for those who are new, Istisna is one of the most confusing standard in the whole book, or in the out of all IOFI standards. Istisna is a little bit confusing. But anyway, the purpose of the trainers is to help. Okay. Now let's move on to chapter 5. Okay. Anyone? Hey, am I muted? Can you hear me?
We can hear you. We can hear you.
Oh, okay. Then chapter 5 is about Ijara. Okay, and this is also this is again this chapter is based on the older standard. So IFI has issued new standard, but in any case, we can understand that many of the basic principles remain the same. Okay, so what is the let me stop here. Okay, done. Okay, the majority responded A, and then followed by C, B, D. I understand that why the majority responded A, because in conventional accounting, or in general, when we identify the depreciable amount, what is the depreciable amount? Cost minus residual value. That is the basic formula we read in our all accounting books, right? Cost minus residual value. So that's why you have responded A. Okay, that's good. But the answer is D. The answer is D, not A. Okay, why the answer is D? Now you can see this is Ijara Muntahia Bittamleek through gift. So what happens in Ijara Muntahia Bittamleek? In Ijara Muntahia Bittamleek, at the end of Ijara term, the ownership of the asset is transferred from the lessor to the lessee, right? And here the transfer will be as gift. So there is no counter value. So the lessor will transfer ownership of the asset at the end of the lease term to the lessee. So there is no counter value. The lessor will not receive any counter value at the end of the lease term or due to this ownership of transfer. So that's why there is no residual value here. The residual value is basically nil, 0. So that's why the answer is D. Now you can also argue, of course, I understand that. You can argue that, well, in A, seems same. I mean, if we put residual value as 0, so this is the same as good as D. Yes, that's true. I agree with you. But as we have mentioned before, that sometimes there could be multiple right answer. In that case, you need to respond or select the most appropriate answer. So most appropriate answer in this scenario is D. Yeah. Because when the ownership will be transferred through gift, then the residual value does not have any role to play here. So that's why most appropriate answer is D. Okay. Now, what about this one? This is chapter 6. Musharaka. Okay, let me stop here. Okay, majority responded B, and then a good number responded A, C, and D. Now, in this type of question, I'm assuming that there will be some confusions. Okay, Musharaka, is it part of financing or is it part of deposits? In the deposit side also, although we don't really find Musharaka, rather we find Mudaraba, but it's still, maybe, I don't know, maybe some may get confused. Okay, which side we're talking about? The asset side or liability side? That is one confusion. I mean, there could be one confusion to some, this one. Now, what is the trick here? The trick here is that you can see the question is asking about what is the accounting entry for a profit receivable. Receivable means it will be received, right? So that means you have invested and now there is a profit. There is a profit receivable. You receive a profit. Okay, we need to be careful that it's a receivable. So that means that you have not received it, right? That means so debit cash is a cross. I mean, it's not right answer. Debit cash, not right answer. So A is not right answer. C is not right answer. Credit cash, it doesn't make any sense because here it is a receivable. So how is a credit cash? So D also is not right. Cross is wrong. So what remains is B. So of course, one of the answers shall be the right answer. So B is the right answer. I mean, this can be one of the tricks. So one trick in the exam you can apply is elimination trick. You don't know the right answer. It's confusing. The question is confusing. The scenario is confusing. There is not much information given in the scenario. So you may feel that, oh, it's not fair to me. There is not enough information. But then what you can do, you can try elimination trick. So whichever is wrong, eliminate those. So after eliminating all the wrong, then you'll find the right. So here, based on the elimination trick, you can find B is the right answer. That's one way of doing it. Otherwise, if you know, like, okay, profit receivable is debit, so it will be part of my asset, and credit will be profit from Musharaka financing, so it's part of income, and that's why it's income statement. So if you know it, so you can save much more time. No? Anyway, so B is the right answer. Okay. Now, what about this one? This is Mudaraba. Again, chapter 6. So Mudaraba. Okay, let me stop here. Okay, the majority responded, or a good portion responded A and D, followed by B, C. Okay, so this is not really an accounting question. Again, as we have mentioned before, not all questions will be accounting questions. Some will be basically fundamental or theoretical, however you say it, or Sharia based. So this issue has covered in the Sharia standard, but also this is mentioned in the FAR module as well. So the answer is terminated, A, and terminated. In the event that Mudaraba capital is lost, damaged, or stolen before its distribution among the working partners by the investor, the Mudaraba partnership will be terminated. This is the general rule. Okay. Okay. What about this one? Now we move to chapter 7. Okay, let me stop now. A, majority responded A, followed by D, gains. Okay, I'm not sure why this will be gain. Why some are thinking it will be part of gain, but no, the answer is A, capital expenditure. And this is consistent with IFRS as well, that whenever there is some expenditures for an asset, and that improves the asset to the extent that it will provide greater future economic benefits, in that case, it will be part of capital expenditure, or it will be part of the assets cost. So answer is A. So okay. So the amount, this cost will be added to the carrying value of the investment, and yeah, but basically it will be treated as a capital expenditure. Okay. Now what about this one? Chapter 8. Okay, let me stop here now. Share results. Okay, so okay, interesting. A good portion, the majority responded B and D, and then followed by A and C. Okay. So the question was the basis for an entity to be classified as subsidiary. So when we consider an entity as a subsidiary, the answer is B, control. The answer is B when it is control. I thought that some will or many will answer C, but interestingly, no, not many answered C. Because in the book, you'll see that the control is achieved when company A, for example, company A own more than 50% share of company B. So this is mentioned, I think, a few times in the book. And in many other books, you'll also see that. But the thing is that to consider another entity as a subsidiary, more than 50% is not the criteria, really. The criteria is control. This is the criteria. So if company A control company B, then company B is a subsidiary of company A. That's the primary criteria. Now, how we will know that this control has been established? So there are a few examples or few scenarios. So one scenario is that company A own more than 50% share of company B. So C, so number C also could be a right answer, but then as we have mentioned, we need to answer the most appropriate one. Or best answer if there are multiple right answers. So out of B and C, B is the most appropriate answer. So in C is right, but C is only an indication that control has been established. So control is the criteria. 50% ownership is not the criteria. This is an indication. Okay, this is about control. Now many responded A and D. That's also interesting. But you see, A, significant influence, that applies for associates. So when we'll say another company is our associate, if we have significant influence over them. And how we will know the significant influence? One of the criteria or indication is that company A own more than 20% share of company B. In that case, B is an associate of company A. So by holding more than 20% share, significant influence has been achieved. So here also, significant influence is a criteria for an associate or to consider one company as an associate. But more than 20%, this is an indication that significant influence has been achieved. Okay, so in this particular example, B is the right answer. Okay, let's move on to chapter 9. Okay, let me stop here. In the exam, of course, you will have more time. I agree that I'm not giving exam. I mean, I'm not giving time as per exam average. Yeah, because in the exam, as I have mentioned at the very beginning, in the exam you need to save time for questions that are more like theoretical. Because for calculation-based questions, you will need to spend more time than the average allocated time. Yeah. Let me share. Majority responded B, A, and 2, and then there are other good number responded C, D. So the answer is B. Why B? Here it says equity type instruments may be classified as 1 and 2, that is fair value through income statement, and then fair value through equity. Fair value through equity. Basically, in this particular standard, there are 3 classifications: fair value through income statement, fair value through equity, and then amortized cost. And these terms has been changed a little bit, but anyway, the issue remains the same. So for equity, there is only these 2 classifications: fair value through income statement or fair value through profit or loss. Sometimes you will see the acronym FVTPL, fair value through profit or loss. Especially the equities. If we invest in equities and the purpose is to trade it, in this case, any gain or loss because of fair valuation, that will go to our income statement. But if it is for hold, in that case, any fair value, any gain or loss due to fair valuation, that will go through equity. That is a basic principle. Of course, there are more stories to it. But for a debt instrument, there could be amortized cost classification as well. So for debt instrument, if our intention is to hold it until maturity, in that case, we'll classify that as amortized cost. But for equities, amortized cost does not apply. For amortized cost doesn't apply, and amortized cost applies only for debt instruments. And fair value through sukuk, it doesn't make any sense. There is nothing like this. So it's like, I mean, in a way, it made your life easier. So there is nothing like fair value through sukuk. Okay. Now let's try another one, chapter 10, from chapter 10. Sorry, not this one. Mistake. Okay, let me stop here. Okay, so the majority responded B, but a good number also responded C and D. The answer is B. B. The purpose of PER, or profit accumulation reserve, is to smooth returns to the investors. This is not to increase profit to the bank, no. And to prevent further losses to the investment account holder, no. Rather, investment risk reserve, we can argue that may serve this purpose. And to prevent further losses to IFI, no, there is no relationship of this to PER. So B is the right answer, to smooth the return to the investors. So just to, I mean, there can be fluctuations in profit rate. So sometimes there can be up, in good times it can be high, in bad times it can be low. So just to avoid that, I mean, many people are comfortable with smooth profit rather than ups and downs. So to ensure that the profit is stable, so we can apply this PER mechanism. Okay, now we move to chapter 11. Okay, let me stop. Yeah,
Yeah, I will be, like, you will remain the host, so I will be leaving for a few minutes. I will just reconnect soon. Okay.
Okay.
Nope, I will not. I will not. But SN will be in few minutes. SN or just hold on. Let me reconnect from the other device. No problem.
Okay, sure.
Don't worry.
Okay, let me end here. Share result. Yes. Okay, the majority responded A, C, and some responded B and followed by D. The right answer is B. You see, you need to keep in mind that when is at the time of acquisition. So which amount shall be used for recording the real estate assets at the time of acquisition? So when? At the time of acquisition. So that's very important. And the basic rule, I mean, I think you can apply that very consistently for any type of asset. So you can apply this for any type of asset. At the time of acquisition, the asset is recorded at cost. Okay. Now, interestingly, when we say cost is, I mean, but here there's not mention. I mean, there's no mention of cost, right? So historical cost, historical price, this basically represent cost. So that's why B is given as the right answer. But I understand that some may still argue, nah, it should be cost. So that's why I will answer D, none of the above. Again, I mean, we can have dispute. There's no argument, but the right answer is cost, but there is no cost here, so we have to use historical price. Historical price basically means cost. Okay. Now, what about this one? Relaunch polling. Let me stop now. Yeah, of course, in the exam you'll have more time, but yeah, let me stop here. And if I share the result, majority responded B, and B is the right answer. But interesting number of, I mean, interestingly, many responded A and C as well. Now, of course, I mean, to answer this question, you need to understand how this Islamic Insurance Takaful fund work. So what happens is that in Takaful model, the Takaful fund is a separate fund within Takaful operator. So there is a Takaful operator. I mean, it's like insurance company, but of course we call it Takaful operator. So within Takaful operator, there is this Takaful fund, and this Takaful fund behaves like an independent entity. So it means that it has its own assets, it has its own liabilities, or it has its own income, it has its own expenses. Now, at times there could be, I mean, the claims could be more than whatever fund is available. So there could be deficit in the fund. So if there's a deficit, ideally the requirement is that the Takaful operator from the shareholders fund, they will give a loan to the Takaful fund. So within Takaful entity, basically there are two entities. One is Takaful operator, other is Takaful fund. And then If there's a deficit in Takaful fund, Takaful operator will give a loan, interest-free loan or Qadal Hasan to Takaful fund. So this Qadal Hasan or interest-free loan will happen only if there is a deficit. Deficit where? Deficit in Takaful fund. So what is deficit? Deficit, very simply, if we, of course, to put it very simply, deficit means the claims are more than whatever is available or whatever whatever is available in the Takaful fund, or whatever money is available in Takaful fund, the claims are more than that. So in this case, we are calling it deficit. But please be mindful that I have put it very simplistic manner. Okay, there are two hand raises. I don't see them. But is here, do you see?
Yes,
Okay.
I'm here.
There were two hand raises, but I don't see them anymore. Is it?
There is no hand raised now.
Okay, then maybe they drop. Okay, let's move on to question number, chapter number 2.
You have to make me the co-host because I'm no more the host.
Sure. But I'll make you the host maybe. You want to, yep. No, let me make you co-host. Okay.
Great, thank you.
Sorry. Yeah, chapter 13, right? Chapter 13. Okay. 5 seconds more. Okay, let me stop here. If I share the result, you can see the majority responded A, 63%, and then followed by B, historical cost. What is the right answer? The right answer is A, market price. Market price. So what is zakat base basically? Zakat base simply means that we will identify the zakatable assets. So out of assets of the company or out of assets of the IFI, we'll identify the zakatable assets. From there, we'll deduct some deductible items. It's like tax. So those of us submit a tax return, what we do, we identify taxable income, then deduct some deductible items, then we find a base amount, and on that we apply, or we will allocate that in according to the tax segments, and then we apply the tax rate. So same goes for zakat as well. So we identify zakatable assets. From there, we minus or deduct deductible items. And then from there, we find the zakat base. So on the zakat base, we apply the zakat rate. And then we'll find the zakat payable amount. Okay. Now, for trading assets, the rule is very simple. For trading asset, we need to apply market price. We need to apply market price. I think, yeah, for any type of asset, the basic rule is that we need to apply market price. And so market price. In fact, if you read the AAOIFI Shariah on Zakat, you'll find that even if the asset is, so you can ask like, okay, market price as in where? I mean, maybe the company's HQ or the IFI's HQ is in one city, but the commodities or the trading goods, these are in a different city. So market price of which place? The price can be different. According to AAOIFI's Zakat standard, you need to take the market price where the assets are. So if the assets are in X city, so we need to take market price as in or as of the X city, not as of the head office. Okay. So wherever the assets are, we need to take the market price of that place. And then also we need, when we are considering market price, we need to consider the manner at which the assets will be disposed of. So for example, if the assets will be disposed of, I mean, those assets will be disposed of on a retail basis, then we will take the retail market price. If we will dispose the assets based on a wholesale basis, then we will take the wholesale price. But only if in cases where it is not possible to determine market price, in whatever reason, even it is not possible to appoint an expert or estimation, these are not possible, then only then we can take cost. Only then we can take cost. Cost is there, yes, you can take cost, it is a possibility, but when? Only if you cannot determine market price. Then yes, you can take cost. So of course, I mean, when you are responding to a question, and the answer will be based on whatever the general response. So the general response is market price. Historical cost is only if market price is not available. So historical cost is not the right answer. A is right. Okay. So this is the last one for us today. Chapter 14. Okay, let me stop here. Yes, the majority is right. C, reporting currency. Reporting currency. So what is the term used to describe the currency used in preparing and presenting financial statements? It's reporting currency. Okay. Foreign currency is if you have transaction in other than reporting currency. Yes, it's foreign currency. With that, I mean, our MCQ exercise is done. That was all for me in terms of MCQs. Now, if you have any question, please ask. If you're free to ask, I'll try my best to respond. But just to add, so at the beginning of our session today, we had one poll, and we found that many of the participants are not sitting for the exam in June, or still not considering for December either. But maybe you are just exploring. But hopefully you have seen that the qualification is not that difficult, inshallah. But of course, you need to study a little bit, no doubt there. It's doable. And maybe based on your other knowledge, you already have seen that you can respond many of the answers or many of the questions correctly. Okay. Hopefully this will give you some, I mean, hope. Okay, so we have one hand raised by Brother Ibrahim. Can you unmute and ask a question?
Assalamu alaikum.
Islam.
Now, alhamdulillah, in fact, I've enjoyed the session so much. May Allah reward your efforts. I have a question. Basically, this is very new for me. I've been attending this session just to get understanding of the whole issue. I want to know who qualifies to take part in these exams. And the second is, what is the importance for having the certificate after passing through the exam successfully? What is the relevance of holding that certificate? And the last aspect is, in case you want to take part in the exams, how much are you supposed to pay?
Brother Ibrahim, can you repeat your first question? I didn't get it.
Okay, I want to know who qualifies to take part in the exams. Who can take part in the exams?
Oh, who can? Okay,
what
okay,
qualification?
okay,
Yes.
okay. So for question 1 and 3, I will request Brother Zia to respond. And for question 2, maybe I can respond. That is, what is the benefit of doing this qualification? Now, I did CIPA, but before that, I was a professional accountant. But of course, I used to know IFRS very well. I mean, not to praise myself, but I used to know IFRS very well. The benefit of the qualification is that it will allow you to go through AAOIFI accounting standards. If you already have the knowledge in the Sharia standards, so it will complement that. That's one. And if you're an accountant, of course, that will benefit you a lot. I mean, if you're an accountant, like that is, if you are preparing financial statement for IFIs, that will benefit you a lot. But in any case, it will provide you, and I mean, it will complement your Sharia-based understanding as well. Yeah, to put it very shortly. But Zia, can you respond to?
Yeah,
one?
sure. Thank you very much, brother. Like you asked 2 questions that brother Mezbah want me to answer. First one was, who qualifies for this exam? You need to have basic accounting qualification, or even sometimes AAOIFI is flexible in terms of you need to have some undergraduate. We can share with you the detail about which of the course. There are 2 programs that AAOIFI runs. One is CIPA, Certified Islamic Professional Accountant, and there is one which is CSAA, which is Certified Sharia Advisor and Auditor. So the details of both you can check on taiflearning.com/AAOIFI, AAOIFI. So you can write an email to contact@taiflearning.com, and we will be more than happy to provide you the information. So the criteria for both the exams criteria is different. And in terms of the fee for CIPA exam is in 4 papers. The standard fee for CIPA exam is $2,200, but if you TAIF is an exam registration center as well. If you register through TAIF, you can get up to 70% discount in your fee based on your location. If you are in GCC countries, you can get up to 50% discount in your fee, and if you are in Nigeria, most probably I think you are based in Nigeria or anywhere else other than GCC, you can get up to 70% discount. Same, the fee for CSA is $1,200, and the same discounts also apply there as well. So you can, we appreciate if you follow the website www.taiflearning.com, and you can, TAIF is also like this session is part of the preparatory class program. So we run preparatory class for both these programs. So although like this session was meant to be only restricted for TAIF student, but we thought that it is important that anybody who is appearing in this exam, we allow them to have access to the instructors. That's why this session was open. So you are most welcome. Any further information, any of you require, you can write to contact@taiflearning.com. I hope I'm able to answer the question. There is question about like a recorded session. Yes,
Jazakallah
at the
khairan.
end of this session, all these sessions will be available to the audience, or the link will be shared for the session. Okay.
Any question, anyone? If not, of course, I mean, you can always write to Taif, also to me, I mean, as well. And this, I mean, I'll share the slides to Taif, inshallah, and I believe it will be uploaded in the system, so you can go through that. With that, I mean, that's all for me today. I mean, since it was basically a sort of a revision session, and the idea was to answer your questions. Okay, one question is, what will be the exam medium, online, physical? But Zia, I think you are the right person.
The
Just
exam.
one second. Yeah, it will depend on the location of the person. There are areas where AAOIFI has examination centers. So if they have an examination center in your city, then you will have to do it at that center. If there are multiple centers in your city, you can choose among the centers. But if you don't have a center in your city, then your exam can be online. But irrespective of the final exam, the applications you can submit online, as I said, through TAIF. So by following the link taiflearning.com/AAOIFI, you can fill in the form online, and the advantage for you could be a significant discount on your fee for the AAOIFI. How can we check? What would you like to check? I've told already that the exam medium is paper based, and it will be physical, or if there is an examination center, and if the exam, like looking at the COVID restrictions, if the exam center is operational, then exam will be in the examination center. If there is no examination center, like most of Europe or other countries, there is no examination center, then the exam or the COVID restrictions in your city are such that exam cannot be conducted at the examination center. The exam, if you will take exam online. I hope I answered the question. Okay, Nigerians living in Nigeria, they can get up to 70% discount, but they need to apply soon, because like it depends on the groups. So we have open groups now. So once we close the group, then we have to have a minimum number of students to claim for that discount. So we do it in batches. So the batch which is open, so when you apply, it depends on whether any batch is available and what is the discount applicable to that batch. So if you apply soon, you can get a discount of up to 70%. Okay, I think there are no more questions. I would like to thank you, Brother Mezbah, and I would like to thank all the attendees today. If you still have any question, query, anything you would like us to explain and elaborate further, or the instructor to elaborate further, kindly send an email to contact@taiflearning.com, and we will be more than happy to answer any of the questions. Thank you very much once again, Brother Mezbah.
Okay.
Thank you very much.
And thank you to all the participants, especially to be interactive, although our interaction was very silent. I mean, in terms of Q&A, but the participation was very good, mashallah. So it gives, I mean, some encouragement to us. I mean, to us means trainers as well as Taif to hopefully organize more, inshallah. And we are also very honored to have our seniors here as well, Mr. Sadakat Khan, as well. I can see Mr. Bavlif is here. So thank you all. Yeah. Hope to see you again, inshallah.
Thank you very much. Assalamu alaikum. This brings this session to an end. Thank you. This session is concluded. Assalamu alaikum.